Hello and welcome back. I'm Roger Royce. I'm a partner with the law firm of Haynes Boone in Palo Alto. I work in the Emerging Growth and Venture Capital Group, and I'm also the author of 10,000 Startups, Legal Strategies for Startup Success, where every week we bring you a podcast interview with somebody who's very prominent in the startup community. And, we can't go too far into a discussion of startups before we get to angel investing. It is very important. It's really key to the startup community. In fact, without angel investors, we might not even have any startups. So today we've got a really great and important guest. We have Margaret Bacheler, who is with the Angel Capital Association. She's the director of educational initiatives. And Margaret does quite a bit of speaking on topics related to angel investing. In fact, I met her through a webinar that they had given on this topic. So thanks for being here, Margaret. And are we ready to jump in?
Absolutely. Thanks for having me, Roger. Hello to everyone. Glad that you're listening, especially if you're a founder, to learn about angel investing. So I am part of the Angel Capital Association. We are a professional association of angel investors. We're a national organization. We have over 250 angel groups who are our members, and over 16 individual angels who are part of these groups. So what we usually say, angel investing boils down to three components for our members: do good, have fun, make money. So what we can kind of show you as a founder, how you can align yourselves with us as going for your first outside round of capital. So just kind of a couple different things that we'll do as an overview about angel investing. And then Roger, certainly if we have some Q&A or other things you want me to follow up on, please let me know. Is that it's really important to understand when you're a founder, the stages that angels play. So angels are usually considered the first outside money in. So maybe you're bootstrapping your company, maybe you did a small business loan. So angels are also looking for equity or looking for being in convertible debt. So a lot of times when I talk to founders, you really want to look at if you are on a trajectory to be a high growth, highly scalable company and looking to do an exit in anywhere from 5 to 12 years. Exit timelines are getting longer, so we can talk about that a little bit. But really the angels looking for the ability to take their financial capital as well as what we call their mentor capital, which is a little play against venture capital, our time and talent and expertise to support founders. So most angels that we work with are accredited investors. You can look that up through the Securities and Exchange Commission on who is an angel investor. And they are really interested in not only investing in high growth, high scalable startups, they often are seeking at least an advisory board role on your board of directors, if not a board role as well. So just be prepared when you're working with angels. You may also be capital raising, but in addition to handing over the capital, the angel really wants to be part of your journey as well and go for mutual success.
How long does a company have to be before they can come talk to an angel?
It's really, there are companies that it's really kind of the stage where you think you need an influx of outside capital to scale quickly and rapidly and be on a high growth trajectory. So what's really kind of important is most angel groups will say they're looking for a company that's scaling at kind of a 10 times rate, looking at a really accelerated growth. What's very important is the story you're telling. So if you're going out for your capital raise, what are you going to do with that first round of money? Because the whole point is to get money from angels, meet milestones every 18 months to 3 years and onward, and then to figure out if those angels want to stay on. Is there an exit in terms of a merger or an acquisition? Are you looking then to go into other capital rounds as you continue to mature your company? So it's less really, you could be in business 1 month or 10 years, but if you're at the point where you're looking to scale rapidly and realizing outside capital besides just what you're bringing in on revenue is what's necessary, that's where an angel would come in. We do see companies that are pre-revenue, but there are plenty of angel deals that are companies already with an existing revenue stream and a product. You really need to have a good prototype. You want to be through the accelerators. You want to be able to show customer discovery, product market fit, be through your first prototype, have a good beta. If you're not there yet, there's no shortage of opportunities wherever you live on the different types of accelerators that could get you into a viable product.
So you don't have to have revenue. So I keep hearing this term traction, certainly from the VCs, but sometimes from the angel groups. Does a company have to have, you said there could be pre-revenues, so you could take angel money before. Sure. What do they have to have? What is traction for that purposes? And is it even relevant at that stage?
Sure. I mean, traction is that you're kind of beyond the minimal viable product, the MVP stage. So you have something that's in the market and you have a business model. So I think that a lot of founders kind of go for this shiny new object syndrome where they have this great technology, they have this service, they haven't yet fleshed out a business model. So throughout an angel group that's going to do due diligence on a founder is, okay, you have this thing, a product or a service. Are you getting initial traction? What's your business model so that the story you're telling to an angel is, if I get X in angel funding, I'm going to be able to, whatever's your gap, I'm going to be able to do an SEO plan. I'm going to be able to get a fractional CFO, CTO. I'm going to be able to get more developers. So you need to tell the story of how that capital infusion is going to take you along this business model journey.
Okay. And can you talk a little bit about what does the angel get in return for that cash? I know what they're looking for now. Is it have to be a priced round? Is it a convertible? Is it a promise to pay later? How is that typically set up?
Sure. Yeah. So most angel investments at this point, it's kind of a third. Most of our angel groups prefer a price to equity round. I mean, there's certainly about a third of the deals right now are safe notes. And then there's convertible notes and then price to equity rounds. I think too, what's really important for founders to understand is not only where their valuation is, but the terms in the term sheet, because some of our angel groups will say that they want certain terms and certain liquidation preferences down the road in terms of when they're able to get that return off their investment.
I see. Is there like a minimum amount that you would expect to see in a round before it's actually priced, or do they come right out of the gate that way?
Yeah, no, I mean, I'm going to do it depends on a lot of this because it's an art and science based on kind of region and based on industry sector. So I think the best advice for founders is, and we have an angel group, it's open source, an angel group directory on our website. To all angel groups, they're not the same. So it is a match that I think the best success and traction that founders have is really looking at the mission and vision of that angel group and what type of sector they're investing in. Look at their current portfolio. Where do you measure up? Where is your valuation compared to the industry that you're in so that you can kind of craft the best story that you can. Most of our angels invest in one of three ways. There are some solo angels out there. I mean, those are a few, very high net worth individuals that will be what's kind of a strategic investor into a new startup. A lot of our groups are what's called angel networks. So it's a loose confederation of people interested in a certain industry or in a region that kind of band together, attend pitch competitions, look at deal flow, and then individually decide who wants to invest in what opportunity. And then there are angel funds. There's no shortage of angel funds, either that are online platforms for deal flow or angel funds that are regionally based that already have a set amount of money in it and they've raised a certain amount and then they're looking to deploy that capital into a specific number of startups over a certain time period.
Let's pause on that for a second. So there's angels that are those are individuals that are making specific investments. Then there's angel groups. So which I think that's what Angel Capital Association works with, I assume. And in that case, a bunch of angels will get together and participate in a financing. And then finally, there's actually funds, or like little venture capital funds, I guess, angel funds that do early stage investing. Those are What's a super angel? I've been hearing that term.
I mean, I think a super angel is really an extreme high net worth individual that's going to write an individual check themselves and be kind of the first investor in. So I think those are rare individuals. They're individuals in certain communities and towns versus not every town. But hey, if you can find one of them, great. If one person can kind of support the check size you're looking to. But also too, a lot of angels, because they're looking for a portfolio diversification, that's why they like to invest in groups. We're aware that 5 out of 10 startups fail. Most of our angel investments, our data over 20 to 30 years will say that you get that 1 out of 10 home run type of 10 to 15x multiple return on your investment. You get maybe 3 or 4 investments that do pretty well, and then 3 to 5 that just don't pan out at all. So the kind of fund model or the diversification is you have a few good outcomes that kind of can help you collectivize and regroup from these startups that did not go well. So from the founder perspective, the best that you can show on how you're de-risking someone's investment, whether that's a competition moat you have, your IP protection, your go-to-market strategy, those are things that angels are going to look for in terms of how much emphasis and influence you've already had on de-risking your business model.
Yeah, and I suppose if you have a group, you can leverage the expertise of the members in the group. So for example, I might know quite a lot about agriculture technology and someone else might not, but if I'm willing to bet on it, then maybe they'll bet on it too. And they know about biotech, so I'll take their bet. Yeah, it makes perfect sense. You said something a little while ago about a term sheet and a priced round, and I'm wondering, do angels, are they like little VCs? Do they want to have board seats and protective provisions, a lot of managerial control over a company? Or are they a little more passive?
They're a little more kind of not micromanaging. I mean, there are angels, depending on the size of the round and the investment, they're going to ask for a board seat, whether it's a board advisory role or a more direct board seat. That, because certainly they have an interest, especially if you have a founder that's pre-seed and it's their first startup. And so they want to make sure there's, for lack of a better term, adults in the room in the board to help kind of de-risk or pivot what's necessary. So certainly part of getting your first round of capital is who's on your advisory board, what's the governance process, is there good governance, how an angel's really looking to mentor a CEO, hopefully not replace them unless there's something catastrophic, making sure the company doesn't run out of cash and really keeping milestones. Most of our groups, I mean, a founder can maybe check in once or twice a month. I mean, there's certainly relationships where founders are checking in weekly, but angels realize the founder is a very, very busy person. And so they certainly want to be kept informed of their investment and what milestones are moving forward, or if there's a stumbling block, that's where an angel group, as Roger said, if people have vast experience or connections, there's some network capital as well as working with angels, because if you're seeing a stumbling block in your business model and that angel group has some expertise or professional affiliation in the area where you're stumbling, they can provide that mentorship and connections for you.
Yeah, and that's a really important point there, isn't it? I mean, it's much better to have smart money in your company, right? And people that can provide, like you say, some domain expertise or maybe some connections, or really importantly, that pipeline to the next set of investors. And the best angels, I think, are the people that can do that for you, as opposed to just being able to write a check, right? Okay, well, let's move on to another issue. One thing I've noticed when doing angel rounds, the other way it differs a lot from institutional rounds, is the level of due diligence that gets performed. So maybe you could speak to what the company can expect to have to be able to prove up. But then secondly, the downside, the good side is we get these things done inexpensively. The downside is the burden is very much on the company to be very forthcoming about their issues, right?
Sure. Yeah. So, I mean, certainly because angels know founders need capital and cash because this is their first outside round. Most angel deals, try to get closed in 4 to 6 weeks. I mean, there's a good process in most of the groups on the turnaround. Groups are very transparent on their due diligence checklist. There's plenty of sources out there to find a good due diligence checklist. The best advice I have for founders is you set up a cloud drive, start putting your financials in it, your P&Ls, any IP protections you have, the expertise of your founding team, your advisory board members and contacts, any customer recommendations you have, any legal issues you may be stumbling on. So the more documents you have prepared as you go through the angel process and due diligence, you can turn over that drive of information to a certain group. And again, that's where a lot of our groups probably have 5 to 7 individuals on a due diligence team. These reports can be 30 to 50 pages. I've seen very long due diligence reports where they are looking under the hood and kicking the tires and making sure that they have the most accurate information they can about knowing that this is a risky investment no matter what, but seeing how much they can find out from you beforehand in order to kind of complete the due diligence process, look at the strengths and weaknesses of the company, and hopefully then move forward into a term sheet and the funding cycle. So certainly most angel groups will be very transparent on who is not going through, it's like they will fail fast and let you know that you're not going through due diligence. A lot of founders are able to, I would say the best advice for founders is be coachable and take feedback. If you're not funded, and you're certainly welcome to reintroduce yourself to that company in 6 months or 18 months when you've taken that feedback and iterated your business model and feel like you've come up with a stronger value proposition to bring back to the angel group.
Yeah, got it. Will an angel force a founder to unvest their shares like the VCs will? Do you see that very often?
No, I mean, there's certainly some vesting timetables that will be put into maybe a term sheet in terms of, a time limit when there's founder vesting. But I mean, certainly the angel perspective is to incentivize this individual to work really hard. As we know, if you get to the point where you're owning such a small percent of your company, you feel like you're an employee and you're not the owner, how incentivized are you to keep growing? So there's usually sometimes, that'd be part of the term sheet negotiation of where you want to, fall with your vesting shares, but there's really no, at this stage, there's really an interest in keeping the founder and the founding team motivated with, founder shares as well as, options as well to those first few employees.
Yeah, you said a mouthful there. That's just so important because you see founders that they mess up their cap tables early on. And I've seen deals fall even at the angel stage, or even the angel says there's no longer enough equity left in this deal for the founder. You sold too much, too cheap, too early.
Right.
So even at that stage, a person has to get pretty good with Excel or some other software program that lets them know where they stand. Now let's suppose I'm a startup founder. This all sounds really good. I really want some angel investors in my company. Where do I find these people?
Yeah, I think it's the power of kind of network capital wherever you live in this country. There's probably an angel group. Like I said, we have if you go to our front website, we have a find an angel group. So we have an open source directory. I think it's through attending accelerator events in your, these ecosystem events in your community. Most angels won't respond to, no need to flood LinkedIn messages to people. So I think it's a matter of looking at what pitch sessions or demo days are in your area. Some groups, I'm in suburban Philadelphia. There's some Philadelphia angel groups that have some open office hours that are virtual, that a founder can plug themselves into and get some initial feedback. So certainly we do understand for the founder that you really kind of have 2 jobs. You're trying to sell your product or service, and then you almost have this second market of how are you pitching your company to investors.
Yeah, and that can be harder because unlike VCs, it's not like a lot of angels, they're not out advertising. They don't have big websites,
Right.
saying here, submit your plan, over the website to me. So they're a little harder to find. Sometimes, and like you say, on LinkedIn, if it's a cold call, they may not respond. So it really, it's the importance of having a good solid network and knowing people, and being able to connect with folks, I suppose, and going to live events too, right?
Sure. Yeah. And again, most of our angel groups, I mean, they'll have a For Founders tab on their website. So you
Oh,
can
okay.
sign up for information or just kind of accept, you can be a LinkedIn connection to that organization. And then they'll put, oh, we're opening our application pool again, or we're looking for founders for an upcoming event to pitch at. And here's the criteria.
Yeah. What
So
what should the founder have ready? Should they have a full pitch deck or just an executive summary or a business plan? When they
I
approach the
think an
angel.
executive summary and a pitch deck, I
Mhm,
think the average pitch deck is now what, 10 to 19 slides.
mhm.
It's not a long amount of time. And so I think it's a matter of just getting something kind of short and brief and explaining something that you can maybe try to get a virtual meeting or a coffee meeting with somebody, or get involved in some event they're having where you can get in front physically or virtually and explain your amazing thing you're working on.
Yeah, we're going to do a whole session on pitch decks, but I like people to have at least that executive summary handy on a moment's notice so we can gauge that initial interest or not.
Mhm.
It's good to weed people out. Well, I really want to thank you for being here. So it sounds like the Angel Capital Association has lots of resources, both for angels as
Mhm.
well as for the founders. How do people find you and get a hold of you and learn more about this?
Sure, yeah, if you go to angelcapitalassociation.org, you'll see we have a knowledge tab on our website. So there's plenty of complimentary information for founders as well as people looking to be angels. So if you're also listening to this, a lot of angels are founders that had successful exits and want to pay it forward and be the change they want to see in the world. So we certainly, a lot of what I do too is oversee our Angel University curriculum. These are virtual classes for not only angels, but founders. As you mentioned, Roger, with cap tables, we have an intro to cap tables course, and it's very eye-opening. We have evaluations course, we have a term sheet course. So for founders out there, it's great to be able to peek behind the curtain and see what the angel wants to see, and to map out those Excel spreadsheets with a cap table so you really understand what you're getting yourself into.
Okay, well, that's great. That's a great resource that you offer, and I want to thank you for doing that. And I also want to thank you for being here today. This is Roger Royce with the 10,000 Startups podcast. And today we're talking with Margaret Bacheler from the Angel Capital Association. Any parting advice for our founders or our angels before we sign off?
Sure, yeah, if you want to be an angel, it's great. Do good, have funny, make money, do collective impact in your community. If you're a founder, just keep grinding and have a business model, not just have a shiny new object, have a business model to support that.
Okay, thank you very much.
Sure, take care.